Hello from Chicago. Alan Knuckman, high above the trading floor at the CME Group, talking about the energy market with the focus on crude oil, but it's going to spill over into gasoline, obviously. The news continues to be the story out of Houston and the disruption that's putting on the energy markets. Now, 20% of the refiners there have been shut down. That's having impact on crude because crude's got nowhere to go, and that's been driving down the prices. So we're down 45 cents here at $46 a barrel in the October crude contract. We did have a bounce a bit today, got up to 46.70, still below that 47, but had some new relative lows at 45.85. So that's under $46, which is significant in itself. The market had been trading between 50 and 47 for most of the month, broke below that $47 pivot. Now that $3 move, $3 range on the base support, that targets 44 from a measured move basis. Now that's if, and I'm going to say if, we're below 47 on a weekly basis here by the end of the week Friday. We'll see how things go from there. Now, what was news today was the inventory draw. Now, that's going to be dwarfed by obviously what's happening in the catastrophe in the Gulf, but the inventory draw was much bigger than expected. So 5 million barrels there for last week. And that was compared to a 1.75 million barrels expected. So that's more than twice as much, almost 3 times as much as the market was expecting. But the markets didn't react positively to this. So that is something to note there. It's how the price reacts when you get that information. And that should have been bullish, and it was not. Now, that's 10 straight weeks of inventory drops. That's an underlying bullish tone, but obviously the news supersedes all this information. Now let's get to gasoline, because we talked about on Monday a tale of two markets. You've got crude oil going down because of the excess supply that's not being refined. You've got the gasoline prices going up because the refiners have been turned off. So let's talk about the gasoline markets and part of it. Now, the spot market, the September contract, which is coming to an end now and has much, much less volume, that has spiked. Obviously, because there's short-term demands. That was about a 187, and so that's pushing 2-year highs in the crude oil market. But the active futures contract that we follow is October, and we peaked today around the 167 level, I think, but backed off, and now we're somewhere around the 165. So we're off of the highs anyways. And what's important to know about that, and the good news to know about that, is if you look at a deferred contract in gasoline, if you look at the December contract's at $1.50, so significantly lower than the nearer term futures contracts. And what that's telling us is the market's not expecting a sustained price spike. So that should be good news. And again, 150 was essentially the level that gasoline was at before this weather event. So to summarize, we've got crude down, new 30-day lows in the market, closing around $46 a barrel. So that's down 1%, but it comes back to $47. It's all about $47 whether we finish above or below that key pivot point on Friday. Alan Knuckman here in Chicago.